When we talk about the stock market efficiency, we always refer to the two famous schools that have different theories. The first school is the efficient market hypothesis, and the second is the behavioral finance theory. The efficient market hypothesis assumes that investors are rational. It assumes that investors are always correct and don't have any mistakes, and they price their stocks correctly. As a result of this first assumption, the efficient market hypothesis also assumes that all markets are efficient, in which the stock market prices are close to or maybe equal to their fair values. Actually, this is the perfect case and the optimal situations that we want to see in our financial markets. However, is this case true in the financial markets all over the world? The behavioral finance has another opinion. The behavioral finance assumes that psychology of investors instead affects their rationalities, and therefore it assumes that stock market prices are affected by the irrational behaviors of traders and investors. So, according to this theory, the behavioral finance theory, stock market prices are not necessarily equal to their fair values. Actually, this is a long debate between the two theories, and this long and old debate about stock market efficiency should be ended. The behavioral finance theory has provided a strong evidence that the stock market is not efficient. So now, given this strong evidence, we should stop asking that old question whether the stock market is efficient or not, and start asking a new question given this strong evidence. A new question must be raised right now, which is how can we improve the stock market efficiency? So what is the objective of this experiment? The objective of this experiment is to test ways that can improve the stock market efficiency. In other words, the objective of this experiment is to answer this new question about how can we improve the stock market efficiency. And actually, your participation in this experiment will strongly help us in finding ways that can improve the stock market efficiency. Now let's have an overview over the structure of the experiment. This experiment is a simulation of a stock market that includes one and only one public company called a WHO company. A WhatsApp group will be created, and the traders like you are invited to join this group and to act like shareholders in this company. What is the schedule of the experiment? The experiment will start on November 28, 2022 and will end on December 29 the same year. This period includes 5 weeks. In each week there will be only 4 trading days from Monday till Thursday. Each trading day in the experiment will represent a quarter in the virtual life of a WHO company. What is your role in this experiment? In each trading day, we will release a report which contains news and information about a WHO company. Reading the report will take from your time about only 15 minutes per day. Reading this report will help you know more about the company and the news and developments about this company. After reading this report, all what you have to do is to give your expectation about the stock price based on the information available in the report. At the end of the week, a short video will be published on YouTube which will give you more news and information about a WHO company. Now let's take an example about the pricing process during a trading day. First, we will send you the daily report. At the beginning of each trading day, a report that contains news and information about a WHO company will be released on the WhatsApp group. You should read this report before estimating the stock price. Second, we will send you the link for pricing. At the end of each trading day, a Google form link will be sent to you on the WhatsApp group. This link will be used to submit your estimated stock price. After clicking on the Google form link, the following page will appear where you have to write your estimated stock price in addition to some personal information about you, such as name and email. And by doing this step, the daily pricing process will be completed. What can you gain from this experiment? First, your trading experience will improve. The experiment is a simulation of a stock market. Therefore, your participation in this market will improve your trading skills. In addition, your participation in this market will also improve your experience in analyzing and understanding the news and information about a company. Second, you will get a trading certificate. The correct trend of a WHO stock price will be known and identified to us and will be considered as the true benchmark in this experiment. And actually, your stock price estimations will be compared to this benchmark over the time of the experiment. If the average beta, which represents the correlation between your estimations and the benchmark, if the average beta is positive, which means if the average correlation is positive at the end of the experiment, then you will pass and you will get a certificate that prove your successful participation in this virtual stock market. However, if the average beta is negative at the end of the experiment, then you will fail in this experiment. Third, you will gain money. If you pass in this experiment with a positive beta, then you will have a strong opportunity to gain money based on the score of your R squared at the end of the experiment. What is R squared in this experiment? R squared measures how much you have been correctly reflecting the relevant news and information into the stock price of a WHO company. For example, if your R squared is 1, which is equivalent to 100%, then your stock price estimation was exactly the same as the trend of the benchmark. Therefore, you were perfectly and correctly reflecting all relevant information into the stock price. Now, all what you can gain from this experiment will be illustrated in the following graph. At the end of the experiment, you will have either a positive beta or a negative beta. If you have a positive beta, then we will measure your R square. If you have a negative beta, then you will fail. If your R square is 60% and above, then you will get cash money plus a certificate. If your R square is below 60%, then you will get only a certificate. Your cash money will depend on the R square, your score in R square at the end of the experiment. For example, if the R square at the end of the experiment was 100%, which means that you were perfectly and correctly reflecting all relevant information about a whole company into its stock price, then you will get a profit equal to 30 million Lebanese pounds. And so on according to your R square until you reach a minimum profit, which is 300,000 Lebanese pounds. What can you lose in this experiment? Actually, you will lose nothing. Failure in this experiment won't cost you anything. You just have to spend about 15 minutes per each trading day for reading the reports. Now, if you want to participate in this experiment, please follow the following 3 steps. First, you have to fill in and submit the registration link in order to register and reserve your place in the experiment. Second, you have to subscribe in the YouTube channel in order to watch the videos that are going to be released during the experiment about a WHO company. And finally, you have to join the WhatsApp group in order to receive the reports and the pricing links.